Welcome to the Forex Trading for Beginners series. My name is Nick and I'm a top author on TradingView. And in this series, we will be covering the most important concepts that you must know in order to trade the market consistently. Okay, so welcome to episode 3 of the Forex Trading for Beginners series. The topic of today's video will be confluence areas. Now, why have I decided to speak about confluence zones in the third episode? Because in the first episode, we have spoken about market structure. And in the second episode, we have spoken about how you're supposed to be using your Fibonacci tool. So now in the third episode, is time to speak about how you can use market structure and Fibonacci, so the two topics of the first two episodes, to find confluence areas in which you will be able to find very good trading opportunities. So this is a very important episode. So just a quick recap from what we said from our previous video. When you see a market which creates a downtrend, you expect the market to create a series of lower lows and lower highs. And at the same time, as we have said in our previous episode, when we want to measure the retracement in the market, we have to take our Fibonacci from the high to the low of the impulse. And when we want to measure the continuation, we have to take our Fibonacci from the high to the low of the retracement. And we have a first target at the minus 27 and second target at the minus 0.618, just putting everything condensed what we have said in our previous episodes. And for an uptrend, same thing, simply the opposite. Now, why we will be speaking about a downtrend in this episode? Because I have a live example of a trade that we have executed with students last week. So I want to speak about it to show you how we use the confluence of structure and Fibonacci to obviously help us execute this position. Now, when it comes to market structure, okay, you have the market which creates an impulse to the downside, a retracement, a lower low. After the creation of a lower low, this previous support is now turned resistance. Therefore, it is a structure area, previous structure support, which is now turned structure resistance. And you expect the market to go for a retest of this zone and reject this new resistance to the downside. However, as you know, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And what you expect is for the market to provide a retracement to the Fibonacci level, which is aligning the best with structure. In this case, the 0.618, which is also the golden ratio. So this means that all this area here is a confluence of resistance zone. Why it is a confluence of resistance? Because it has the confluence of the previous structure support, now turned structure resistance, with the 0.618 of the Fibonacci taken on the impulse, which is as well a structure area. So this is a very strong zone in the market from which you do expect the market to provide a rejection to the downside, specifically for the creation of a lower low. So as you have already understood, this is what confluence means. Many resistance zones or many support zones that are aligning at the same area of price. And that is exactly what happened on USD-ZAR last week. In fact, what we had was a quite strong impulse to the downside here. Now, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of the impulse, we can identify that the previous structure support, which is this area here, which is now turned structure resistance, is lining up with the 0.618 of the Fibonacci taken on this impulse, which is the golden ratio, meaning that this area here is a very strong confluence of resistance zone because it has the combination of the previous structure support, turn resistance, with the 0.618 of the Fibonacci taken on the impulse. And what you expect from this area is for the market to create the continuation to the downside. So that is how you use market structure and Fibonacci's in confluence to find confluence of resistance or support areas. When it comes to a longing opportunity, it's the same thing. You have an impulse correction, the market breaks to the upside, goes for a retracement. At that point, this area here is previous resistance, now turns support. If you want to measure this correction, you have to take your Fibonacci on the impulse, so from this low to this high. And what you can see is that this area here is the confluence of support from which you do expect the market to provide the continuation to the upside. Now, with students, we capitalized on this move to the downside. Now, obviously, having a confluence of resistance alone is not enough for an opportunity. Why it is not enough for an opportunity? First thing first, these are just a kind of bonuses that I add to the lesson. Today's lesson was a confluence of resistance given by market structure and Fibonacci's. Now I'm expanding the concept, so it will get a little bit more complicated, but no worries. I suggest that you continue watching because it will be very interesting. Just a quick reminder, if you have any suggestions for further topics that you would like me to cover in the next videos, you can just leave a comment below. Now, when it comes to finding opportunities, obviously here on the daily, you have identified this confluence of resistance, but that is not enough for two main reasons. One, you have checked only one time frame. Two, you haven't checked what the biggest banks and institutions are doing in the market with the commitment of traders. So when you're looking for an opportunity, the monthly, weekly, and daily timeframes are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. Now, in this case, we haven't checked what we have from a COT data perspective, which is obviously always best to check when it comes to the directional aspect, so checking it together with the monthly, weekly, and daily. And we haven't checked what we have from an entry perspective if we have our confirmations. The only time frame that we checked is the daily. So obviously we cannot be looking for a shorting opportunity based only on the daily time frame. So what did we have on the weekly time frame? Now on the weekly, what we had was a candle here. Now when you see a candle like this in the market, what you actually expect is for the next candle to fill in this wick. The reason for which you expect the next candle to fill in the wick is because when you see a candle like this on the weekly, on the daily, you actually have an impulse and a correction, which in this case, that is exactly what we have. Because this wick here is actually the retracement on the daily, meaning that when you have a candle like this on the weekly, on the daily, you will have an impulse and a correction, in which the correction is exactly the wick that you see here. And after the impulse and correction, you expect a continuation to the downside, specifically if here you have a confluence of resistance as we actually have in this case. And on the monthly, what did we have? Now on the monthly, we had a market which was clearly breaking below structure. So we could definitely expect the market to create another move to the downside. Now, when it comes to the COT data, what did we have from a COT perspective? Now, from a COT perspective, what we had on the USD was a market which clearly had net positions greatly decreasing in a quite strong negative positioning, meaning that hedge funds had more shorts than longs. So they had more short positions than long positions in the market. So they were quite bearish on the USD. And from a ZAR perspective, we had very strong ZAR. So we could definitely expect the market to create the continuation to the downside, which is in fact exactly what the market did. And we did capitalize on the move to the downside with students. Now, when it comes to executions, again, you can use structure, but structure is just a small part of what you can actually be looking for when it comes to confirmations from a 4-hour perspective. Yes, we do use structure, which is this previous support to resistance, but that is not enough to take an execution. Obviously, I cannot share my rules for entry. That is part of the strategies, the rules of my strategies. I can just share this basic concept, which is structure, that you can use also in the 4 hours for some more confirmations, but it's not enough. You cannot use structure alone. It will not give you accurate signals when it comes to finding executions in the market. So yeah, I hope that you did understand how confluence in the market works, specifically the confluence of market structure and Fibonacci's that you can use to identify high probability turning areas in the market on which you can be looking for potential capitalizing opportunities. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education for all of you. Also, once you have mastered the basics of the market, you can also move to my live analysis series, also here on YouTube. And then if you enjoy my content, I also have a mentorship program, which I will link in the description. In the mentorship program, I teach you all the rules of my rule-based strategies, and then you can trade them live with me. Every single day, I give you a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. You find the link in the description, and I will see you in my next video.